zero cash flow properties? Say what? Do you purposely want to purchase a property that has zero cash flow? And we're going to talk about zero cash flow investments. Now, this is a thing, definitely a specialized thing, but a thing nonetheless, because it can really be a benefit for people in the right situation. So, a zero cash flow property is essentially a property that is a triple net lease investment, which means that the tenant pays all expenses for the property in addition to paying rent. That's very common in a single tenant net lease arena. So a tenant like Walgreens, CVS, that type of thing. Gas stations are oftentimes set up in this type of scenario, KFC, Wendy's, on and on it goes. It can also happen in the office space, but it's certainly not as common. So in a zero cash flow investment, they begin with a net lease property, and they actually write a lease where the rent that the tenant pays is equal to the debt service for the property. So a bank will make a loan that is at a higher leverage usually than they would make for a commercial property. So instead of it being a 70% loan, they might make it an 80 or 90% loan to value. But in exchange, the tenant makes their rent payments directly to the bank. And it's usually going to be at an amortization period that equals the length of their lease. So if they have a 20-year lease, then it would be a 20-year amortization. The bank is willing to lend more because they feel secure that the tenant is paying it directly to them. So the owner of the property is getting no cash flow, but they don't have expenses because the tenant is paying the expenses. What the owner of the property does have is the tax benefits. So the interest that they pay is a write-off, and then of course the depreciation can help to offset other income they may have. So it's a big benefit at the beginning. Towards the end of the loan and lease term though, it can become a situation where you actually have negative cash flow, from the sense that on paper you have income, but you don't have enough depreciation expense and interest payment deductions in order to balance it out. And you might actually owe taxes even though you're not receiving the income. However, when the loan is paid off, you got a property free and clear. You probably have a location that's outstanding, continuing also most likely a really good tenant. So it can be the right type of property purchase for a particular investor who really is just looking for appreciation long term and maybe some passive tax benefits. If you would like to be connected with a professional who specializes in this type of investment or other niches, feel free to contact us and we can make a referral anywhere in the United States.